All right, welcome everybody to an important Facebook Live and live YouTube stream on holiday tax write-offs. Now this includes holiday travel, holiday gifts. I'm gonna bust it out. I've got 5 or 6 notes here, very important. Had 3 or 4 CPAs helping with me with some research today. This is tricky stuff, and so if you're a business owner and you're gonna spend money around the holidays traveling and maybe giving some gifts, can we find a tax write-off for some of that? The answer is yes. Now there's going to be some boundaries and we don't want to get too crazy. We don't want to ever get into audit problems with the IRS. We want to be honest and ethical, but there are options for strategies, and so we're going to go through them. Thanks everybody for being here. Please, don't go anywhere. We're going to keep this tight, 15 minutes or less. I want your questions in the comment section. Please put your questions. I'll be fielding those as we go. My contact information will be down in the messages as well, and I hope that we can be of service to you during this holiday season. Year-end tax planning is so, so important. Now, I'm a CPA, an attorney, best-selling author of the new book, The Business Owner's Guide to Financial Freedom, What Wall Street Isn't Telling You. Just came out a week ago. I say best-selling author because I have 3 other books, so I've sold a ton of books. I'm out there helping you, the entrepreneur, live your American dream. I'm also a senior partner in the law firm of KKOS Lawyers and accounting firm K&E CPAs. Anyway, I'm out there. So I want you to feel like this is legit. You can count on it. Be careful what you look and find out on the web. I know you can find some website that'll let you do what you want to do, but that may not be the right answer. So we're going to knock it out here. Okay, so let's hit travel, and I'm going to put actually the holidays up here. So holidays, and we're going to hit 3 or 4 different points, and I'll pause for any questions. Got Nancy here on the computer fielding any questions that you might have. The first point I want to make is travel. Now, travel is your easiest write-off. It's 100% deductible for business purposes, and that means stuff like airfare, hotel, Uber, tips, valet, any sort of travel, transportation, and all that hotel stuff. That's 100% write-off. Now, the beauty of that is you can write it off whenever you have a business purpose. So what I want you to do is have your board of directors meeting during the holidays. Maybe it's at Thanksgiving, maybe it's around Christmas or New Year's, but have dinner, have a meeting, take notes of what your 2018 goals are, build that board of advisors or board of directors. Now you can go to my YouTube channel and see multiple videos on how to build a board of directors, how to build a board of advisors, how to use them. Guys, this can help you as an entrepreneur so much. Even if you don't take the tax write-off, I want you thinking about how to get engaged with a board that can help me succeed. Now, again, if you travel somewhere, timing is important because your day to get there is a write-off, your day to get back is a write-off, and your day there for the meeting is a write-off. So think of it like a Thanksgiving scenario. You travel on Wednesday, you have Thanksgiving on Thursday, but you take the time for a documented board of directors, board of advisors meeting that you put in your minutes of your LLC or your minutes of your corporation, and then you travel back on Friday. That's 100% write-off. I would write off 100% of your airfare, and if you stayed in a hotel because you didn't want to stay with the family in the house, you know what I'm saying? So think about what you could do to take a write-off around Thanksgiving. Now, if you stayed multiple days, a business day is considered around 4 hours. So you want to get at least 4 hours of work in checking on a rental property, meeting with a vendor, meeting with a customer, selling a product or a service, meeting with some sort of strategic partner or affiliate, all very, very powerful. Now, that is option 1 is travel. Nancy, any questions on travel so far? All right, guys, I'm here for you. So if you have a question on any one of these topics, I want you to hit it. Now, dining during the holidays is going to be a write-off. It's limited to 50%. I've got more food that we're going to write off 100% of, but dining out, I'm going to call it dining out, is limited by 50%. So let's say you go to dinner, but you talk business. And again, you may be meeting with your board of advisors, directors, a vendor, a customer, property manager, partner, whatever. That's a business write-off, and that dinner is going to be deductible up to 50%. That includes the bar tab, the food, the tips, yada, yada. So dining is a big one, and I love that. Now, you can get away with 100% write-off for food if it is a holiday party for employees, and I'm going to put for employees or vendors, and over 50% of those in attendance, this is the rule with the IRS, over 50% of those in attendance are non-owner officers. So you can't just say, I'm going to do this with my family because they're on my board of directors. Now you can still write off your travel and half a dining to have your board of directors meeting with a family scenario. My wife and my kids are all on my board of directors. That's going to be a write-off. We're going to do a little bit of that around Christmas. We're going to take notes. We're going to have a training. My kids love it. I totally ruined Christmas with the business training, right? Now, but a holiday party where I have my law firm employees come out, that's 100% write-off because it builds morale, and it's a presentation morale building type event with more than 50% of non-family, non-owners. So those are our first 3 write-offs, and I got more, so don't go anywhere. Nancy, questions?
Just a general question. What about cruises? If someone's going to go on a cruise, is that going to be considered a write-off?
The question that came in is a cruise. A cruise is a scary one. There are per diem daily limits on how much you can write off on a cruise. I believe, I'd have to check the technical rule, but I think it's 2 times the federal dining or travel limit for a cruise. So if you go on a cheap cruise, you might be able to write off most of it by the time you run the per diem limits. But if you do it a more expensive cruise, you're going to have limits. Number 2, you've got to show that the cruise in the first place has a business purpose every day. So you're doing presentations or meetings. And then there's special rules about, is it a U.S. port or not? It gets really, really technical. So you want to talk to your accountant before you jump on a cruise. The better write-off is an all-inclusive. Go to a resort, go to a hotel, go skiing in the mountains, go to the beach, whatever, stay at a hotel, have business meetings every day, no matter what the cost is, as long as you've got a good business purpose and a little business income to justify it, you're going to get 100% write-off on the travel and 50% on the dining. Next question.
Riley wants to know, if they're having one of their meetings, do non-owner officers have to have a stake in the conversation? What if the company or business is just simply brought up?
Okay, so Riley said about this meeting, what happens if they're not participating in the meeting, it's just they're there. There has to be some contribution from the person in the meeting, and I hope you're not talking about your 5-year-old daughter or son, but someone in the meeting that is contributing or providing some sort of advice. I didn't put my teenagers on the board of directors till they were about 13 or 14 years old, where they could actually make an insightful question or comment, if you believe in teenagers being able to do that. But here on these 3, Riley, dining out, anybody that's at the dinner that's making any sort of contribution to the meeting, and they don't have to be an owner or officer, they could be a customer, a vendor, or a child employee, that dining's an easy one. The 100% party write-off, you've got to make sure that the people in attendance, far more than majority, are non-owners. To get away with this rule, there's special revenue rulings and court cases on that with the IRS. Okay, now I want to get to the next one. And this is probably the big one, that's the scary one, is that people want to write off gifts. Now I'm going to give you the general rule and then maybe some exceptions to this or some techniques with this. The first rule is it's limited, and I know this sucks, this is just ridiculous, but gifts are limited to $75. 75. I can't believe I said 75. That's $25. I apologize. $25. Boy, some CPA about croaked in his chair watching this. $25 limit. Now, this is an individual, so a gift to an individual. And if they're married, that's ×2. So if you're, you have spouses, you can go ×2. And also, this does not include gift wrapping, engraving, some of those expenses. This is just the core gift. So I'm going to say excludes gift or personalization. I'm just going to say personalization. So it's kind of like, again, gift wrapping and engraving. Now, here's the rule. Even with this $25 gift rule, you've got to have 5 criteria. Now, I'm going to just kind of summarize these quickly in this kind of column area here. You have to be able to indicate the cost, the specific cost, a description of the gift. You need to show a business purpose, the date you gave the gift, and your business relationship. Now, for example, in our firm, we're giving out some charging banks, a Christmas card. Sometimes we're going to give out a gift basket we're going to give it to a client and his or her spouse, and we're going to exceed the $25 limit and go to $50 on a lot of those gift baskets, but that's a write-off. We have a business relationship, the date, what we gave them, why, and all that. Now, this is the general rule, and this is kind of crappy, I know. Now, there's some strategies out there that people talk about to get around this, and I'm going to bring up 3 of them. And Nancy, before I get into these 3 exceptions, is there any questions?
Well, Riley just had a follow-up question. He wanted to know, are there special rules if you're meeting with potential investors?
He said if there's special rules meeting with potential investors. Now, again, anytime you want to go out dining and do entertainment. Now, I'm not talking about a holiday trip that you're trying to shoehorn into a write-off. If you're going to go out and meet with customers or vendors or a potential investor, and you're going to take them out to Ruth's Chris and spend $500 on dinner and drinks, and then you're going to go out to a basketball game and buy them seats on the floor and schmooze them and talk business the whole time, you're going to write off 50% of that as dining and entertainment. That's a great write-off. But if you're going to try to do it around the holidays with some family members on your board of directors, that's kind of what I'm talking about here, is you've got to make sure you have a business purpose for that meeting and just don't write off your trip for Thanksgiving. You got to be able to justify it and take notes and explain why. Great questions, Riley. Okay, now let's get over this $25 limit. So $25 limit, I'm going to just mention a few strategies. Now, for those CPAs out there that are watching, this is where I know you're going to cringe a little bit. How aggressive do you want to be? If you search hard enough, there's some regulations we were finding this morning, some revenue rulings, some court cases. We have various resources, the same as many of you, B&A, CCH, Bradford Tax Institute. We love a lot of our resources, many more than that we look to for advice on this. But one of them is, and I'm just going to throw these out, is the $25 limit is to individuals. Now that's quite clear in the regs that it's to individuals. There's arguments out there that businesses are different. So if you have a business purpose with a business and it benefits the company as a whole and their employees. So maybe you buy iPods for this client of yours and they give them to all their employees, and that's considered a gift. In some senses of the word, it's also a resource. It has a business purpose. It's to a valid company or corporation, and they're going to use it in their business. That may be deductible to you, and you don't need to 1099 them. Now that is, again, a gray area. Some people would argue that the definition of business is different than definitions of individuals. Now I'm just giving you arguments, and you can decide what you want to do here. The next one is gifts of entertainment. Now this is a pretty clear one that's out there, and we were excited to find this. I thought it was kind of interesting. A couple cases I hadn't seen before is that instead of calling something a gift, you can gift entertainment. So you can give show tickets, theater tickets, a sporting event, even a scout ticket type of thing on Ticket Hub, some resource to get cheap tickets, and then give a gift of entertainment. Now, in a lot of ways, if you give entertainment, you might be limited by 50%. But there are cases and regs out there that allow for 100% deduction when you're giving a gift of entertainment with some of these gifts of sports tickets or theater tickets. So if you're in that mode where you want to give away theater tickets or something like that for a Christmas gift to a business client, again, with the criteria of a business relationship, purpose, date, cost, and all that, you should be able to write off 100% of that and be over the $25 limit. So those are a couple options that could work for you. And the other one that I wanted to highlight is employees. So if you're going to give employees gifts, you can give employees gifts of over $25. But if you do, you still get a write-off, but you have to include it in their W-2. And that's a difficult situation. So the employee may be like, wow, thanks for the gift, but you slapped it in my W-2. And then when you say, well, do you want the gift or not? I'll take it. So it's hard, but that's the technical rule on employees. Now I'll talk about maybe some realtors that give gifts at closing, and we'll come to that. Question, Nancy.
Gloria says, can you write off all your 30-minute business consultations that don't lead to a business, that don't lead into a business relationship? And is this a topic only for the holidays?
Okay, 2 questions. Gloria says, first, if I'm having all these 30-minute lunch meetings and I'm hoping some turn into business but some don't, can I still write them off? Hey, if you're making a business pitch in that meeting, you get a write-off for that. So just keep a record in your calendar of who you met with, what you discussed, and you're good. And that's why keeping a good Outlook calendar is very important, because if you ever get audited, I want to go after those. So keep a calendar, and those are a great write-off, whether you close the deal or not, because on a regular basis, you're going to close some of them, and the IRS will see that those were legit. Then she said, does all this rules apply to the holidays? The holiday gifts, I shouldn't say, no, you can do this gift rule anytime during the year. It could be Valentine's holiday or 4th of July holiday. So I don't want to just say it's Christmas holidays. The dining rules I'm talking about are not specific to the holidays. Maybe I made this a twist on the holidays because a lot of people don't think about using this strategy around the holidays. But all these rules I'm talking about are year-wide. But what I wanted you to do in this quick YouTube presentation or Facebook presentation is think outside the box. Try to find a business purpose for your holiday trips. That's really what this is about. Any final questions? And then this is a wrap. All right. Well, folks, everybody, have a safe holiday. Drive carefully, drink responsibly, party responsibly. Make sure you're talking business on your meetings, and keep good tax records and talk to your accountant. You might be able to find a write-off for this event. Thanks so much. Dylan, can you close this down? Got to get my text here to close down our Facebook Live. Thanks, everybody.